It is the morning of Sunday the 14th of October. This is the video analysis for the week starting the 15th of October. Okay, so dollar index, we've had a good run up. We know all about this trend line which has been holding. It's interesting how we rejected the trend line last week and the 200-week moving average and the 100-week moving average, which I had thought would hold us last week, but we rejected it this week. So this looks quite negative in the slightly longer term for obvious reasons, and we break below the 2-week low at 94.95, 95.00, 94.95, which you know is a level, and I'll show you on a short-term chart in a minute. That should take us down to at least the 94.40, 94.35 area. We would need clearly a break above 96.30, 96.40 for the bull market to continue. Now this is where it gets slightly confusing, because in the short term this 95.00, 94.90 area is quite good support, and it worked well on Friday, and in fact it's quite a bullish piercing candle. We held the 100-day moving average just below 94.90, 94.85. So in the very short term we could actually turn around and go higher. And on the 4-hour chart we've got some quite bullish moving averages, where we've got the 100 period moving average crossing over above the 500 and 200, and the whole cluster of moving averages here has also reinforced that 95.00, 94.90 support area, which is where we bounced on Friday and rocketed up. So short term it does actually look like the dollar will go higher, the dollar index will go higher, maybe up to 95.60. And as I said, we really only bullish up through 96.30, 96.40. We've got the recent highs up at 96.05, 96.15. So I'll turn bearish again if we break below 94.80, which we might well do. We might well retest these highs, retest that trend line that I showed you on the weekly chart, and then plunge. But until we get below 94.80 in the very short term, I am positive, or even though the longer term charts look negative. I hope that makes sense. Australian dollar had a bit of a bounce back last week after a significant fall the week before. We don't have a bullish outlook yet. Let me just show you on this weekly chart. Okay, you'll remember the 10-year trend line going back to 2008. Now, this is where we have bounced to at the moment. I'll just show you that there. That's where we've bounced to, and we've held it. So let's have a look at the shorter term charts. I'll go to the 4-hour chart as well. I think that's got more detail than a daily chart at the moment. So we've got a 23.6% resistance at 71.35, 71.40. Now that worked really, really well. I had that level on the report and it worked really, really well. We turned around and went lower. So having rejected the short-term fib and that trend line that I showed you in the weekly chart, the outlook is negative. We'll need to move significantly above 71.50 for it to be more positive. But even then, we've got some short-term moving averages up here at 71.70, 71.80. If we get up through 71.50, the real area to test will be around the 72.00 area. We've got some trend lines going on there. Actually, this one's not particularly relevant. I'll take it off. We have got a longer term trend line coming down here, as you can see, from the beginning of June. And we've got 55-day moving average almost converging with that. So 72.00, 72.10 will be the next big level if we get up through 71.50. New Zealand dollar versus US, clearly in a bear trend. We've had a bounce back, but I don't see this as the beginning of any sort of bull trend or anything positive. We're just easing oversold conditions, so we're selling into any rallies. I can't add anything more than is already on the report. Dollar yen shows quite a negative 3-week pattern on the weekly chart. Big blue candle, and then this kind of shooting star doji type thing, and then the big red candle gives us I forget what that pattern's called. You know how I'm useless with names, but I know this is a negative pattern. So worth watching. On the short-term charts, we're holding, well, I thought we would bounce off this 112.20, 112.10 fib area, but we didn't. We continued lower to the 55-day moving average at 11.84.85. I had longs needing stops below 11.80, so although the long trade hasn't worked, we haven't actually broken lower either. So we're clearly holding this 55-day moving average. This does work quite well sometimes, 55-day. So we could have a little bounce back in the short term, in this short-term bull trend. We'll just have to see. It's a slightly confusing picture. The Euro-Yen chart is actually extremely confusing as well. We're looking at the short-term chart here. The daily and the weekly really don't tell me anything. Now, for some reason, I managed to catch the high here. I had 130. 10.20 with stops above 150, was it? Or 130.20.30 was the selling level. Anyway, selling around 130.20, we didn't get stopped, and the shorts worked really, really nicely. So pleased about that. But the charts are quite confusing. I think it's the 4-hour chart that gives the clearest picture. So we've got the trend line here and the 200 period moving average, both which have worked. So we've been shorting it up here last week, and it worked on both occasions. We've been holding just above the 50% line. So a break below 129.00, there's a sell signal, and this is why. And then we will head down towards 128.00, I imagine. So this explains what I've been writing on my report. We'll obviously have to get up through 130.55 for a move towards 131.15, 131.25, and then we'll need to stop above 131.40 on that. But yeah, it's quite a confusing chart, so I'm quite pleased we've managed to get a couple of winning trades out of it. Talking of confusing charts, the euro versus the US dollar is giving us a wonderfully confusing picture, as you can see over the last few weeks on this weekly chart. No point in looking at that any longer. Daily chart, which we had thought was this terrific inverse head and shoulders, is not. We're dancing around the 500-day moving average. We're holding below the 100-day moving average. Wow. If you can make sense of this, please let me know, because I certainly can't. Having said that, we did have some winning trades in here last week. Now, I've used the 4-hour chart to get my levels. Seem to be having to go shorter and shorter term in these sideways trending markets. And unfortunately, we didn't quite get to 116.20, 116.30 for the sell opportunity. I can only hope you jumped in a little bit early, because we peaked at 116.10. And then I had a buying opportunity down here, and we just missed that as well. 115.25, 15, I think I had it as, and we got down about as low as 115.35. So we just missed that as well. So the levels are working, but unfortunately they didn't quite touch them in order for us to get our orders off. But it is a confusing picture, and I'm just trying to get ideas from the 4-hour chart at the moment. That's the only thing that's making any sense whatsoever. The longer we go sideways, the harder markets are to decipher. You can see the 100-week moving average had quite a significant effect on prices over the last 6 months or so, but now that relationship's broken down. The 100 and 200-day week moving average rather converging here, but not really having any effect on price whatsoever. Not helpful. The daily chart is just a total mess. But we did manage to get some profitable trades, or 1 or 2, I think, out of this market last week. I have to check my report, but we're getting some sense out of the 4-hour chart here again. So this is what I'm relying on. Yes, that's right. I had 130, well, certainly around 130.70 as resistance, and that worked really well. I think I had the 130.60, 130.70 area as strong resistance, the key resistance, in fact. And if you sold there, that worked really, really well. We came down to the support at 130.00 and bounced straight off it. So these two levels, this is why I picked them from the 4-hour chart. I had to really go down into the short term to find these levels, which worked really, really well. So we have managed to make some decent profit. But as I say, with this sideways trending action, it's really, really testing me and causing me a lot of work. I'm spending hours and hours trying to find areas to trade. The pound is mostly Brexit-led, I believe, and I'm not a politician. I don't understand the whole Brexit process. I don't even want to try. So I'm not trying to forecast the pound on what the politicians figure out. I've left it alone mostly. This is the pound versus the yen, and you can see this is just one chopping around, literally up for a day or two, and then a big move lower to cancel out the whole move. So it's great for scalping. If you're a good scalper and you're using this to fade the moves, then you're doing fine. But for me, this isn't a market that I can trade. Gold. We did all right in gold over the last month or two, selling that level up around 1206, 1208. I still remember that horrible Tuesday when we got stopped out just before we went lower. But since then, the level worked really, really well. Now, I'll actually probably take that trend line off. I'm not sure if that's relevant. Maybe it is. Okay, so then on Thursday, we rocketed up. Unexpectedly, really, through here. There wasn't really a huge news event to cause gold to do that. But if you knew very well that if we broke above 12.14, this was a good buy signal. So if you managed to get onto that move, even if you sold it and then got stopped but managed to buy into the move, we had a great run up to 12.26, just below the 100-day moving average at 12.28. Now we've pulled back a little bit to 12.15. Obviously, if we get back down to sort of 12.12, 12.10, and that should offer support from the break point. And if we return to here, we could bounce and then rocket up again to 12.28. And obviously, we're going to have to get through that 100-day moving average for the next leg higher, which will take us up to 12.35, 12.38. Now that's quite strong resistance, so I would expect that to hold initially and for us to turn back down again. Now it'll be quite boring if we get back below sort of 12.05, 12.04, because then we'll be stuck in this mess that we've been in the last 2 months, and I'll just have to review it then. What's key is we've broken above that trend line, which if I scrunch up the chart, you'll see goes back to, I think it's a 15-year trend line, isn't it? I think that goes back to 2005, 13-year trend line. So we're back above that now, which again is an important factor, important bullish factor. We've got the 200-week moving average at 12.34. So as I say, 12.35, 12.38 will be a big resistance level for this week. The short-term chart is actually the, let's have a look now. We've got this on the 4-hour chart. Is quite a nice, is quite clear on why we can buy into any dips. So we've got the fibs up here, and at the moment we've got the 500 period moving average coupled with the 23.6% fib at 12.17, 12.16, working really nicely to support. I had that level on the report, of course. So if you were scalping and you were trading that level, it worked really nicely. If we break lower, kind of hope we do, get down to 12.12, 12.10. This should be our big buying opportunity for the week, and hopefully we'll hit that and bounce off. But I'm not saying we'll even get there. We might just hold this level again on Monday and then push higher. So what would I suggest? If you're into swing trading, buy a little bit here, save some bullets in case you want to buy a little bit down at, if you can, buy a little bit down at 12.12, 12.10, and you're going to need really a stop below sort of 12.05. That's going to tell you that this trade is wrong. EMI and S&P suffered some big losses in the last 2 weeks. Obviously, last week we had a big plunge, almost 200 points. We bottomed at 27.12. I don't see this as the start of the crash. We will crash eventually. Obviously, we have to crash. That's the way markets work. They work in cycles. I don't see it happening yet. We should have a period of volatility where the bulls and bears battle it out, and this might be the start of it, where we have a few weeks, probably even a few months of some serious volatility. But that's what usually happens at market tops. They don't turn usually in a week and then just collapse. So even though it is October, and October is notoriously a crash month, if we can hold above the 200-day moving average 27.70, 27.65, we can start to build a recovery next week. Maybe if we get back up to 28.80, then it's a selling opportunity again. I could be wrong. We could just collapse. Of course, it's possible. But I just don't think it's going to happen yet. I think there's too many people looking for a crash, looking for a recession. I've never seen a crash happen when everyone's talking about it and everyone expects it. These things happen out of the blue, and markets do build big topping patterns before market crashes. So this would be a unique situation if we were just to continue lower and crash 30-40% in a straight line.